Let's look at some important updates regarding income tax forms that will make filing easier for many people in the upcoming year. That's assessment year 2025 to 26, which covers income earned in financial year 2024 to 25. The tax department has brought out new versions of the simple tax forms known as Sahaj, ITR-1 and Sugam, ITR-4. The main idea behind these new forms is to make e-filing simpler for smaller taxpayers. Who can use these forms? Both Sahaj and Sugam are for residents whose total income is up to 50 lakh rupees in the year. ITR-1 Sahaj is specifically for individuals. ITR-4 Sugam can be used by individuals, Hindu undivided families, HUFs, and firms that report their business or professional income under a presumptive scheme. What types of income do they cover? ITR-1 Sahaj is for income from salary or pension, only one house property, other income sources like interest, small amounts of agricultural income up to 5,000 rupees. ITR-4 Sugam is for income from business or profession income under the presumptive scheme, along with salary income, rental income from one house property, other source income. The big change, capital gains allowed with conditions. This is a significant update. Previously, if you had any capital gains, even a small amount from selling shares or mutual funds, you usually had to use a more complex form like ITR-2. Now, for assessment year 2025 to 26, both Sahaj, ITR-1 and Sugam, ITR-4, allow you to report certain long-term capital gains, LTCG. Specifically, you can report exempt LTCG under Section 112 up to 1.25 lakh rupees. Important conditions: these gains must be fully exempt, and you must not have any capital losses to adjust, carry forward losses from previous years. So, if your total income is within the 50 lakh rupees limit, and you have some gains from selling equity shares or equity mutual funds that qualify for the 1.25 lakh rupees exemption limit, you can now include them directly in these simpler forms. Where do you report these gains? The updated forms have special spots for this. In ITR-1, look in the exempt income section for a drop-down option specifically for long-term capital gains under Sec 112 are not chargeable, up to 1.25L. In ITR-4, there's a line under income on which no tax is payable for long-term capital gains under Section 112. What capital gains still require other forms? Remember, this change is limited. Short-term capital gains still cannot be reported in Sahaj or Sugam. Long-term capital gains above 1.25 lakh rupees still require ITR-2 or other appropriate forms. Crucially, if you have any capital loss carry forward from earlier years that you need to adjust, you cannot use ITR-1 or ITR-4. These forms do not allow for the set-off of losses. You must use the correct longer ITR form for loss adjustments. Other notable updates: rent deduction, Section 80GG. If you claim a deduction for rent paid because you don't receive house rent allowance, HRA, you must now attach Form 10BA along with your ITR filing. Don't forget this. Tax regime choice, ITR-4. If you have business or professional income and use ITR-4, the form will now ask if you had opted out of the new tax regime, Section 115 back, in the previous year, A 2024 to 25, by filing Form 10 IEA. This helps track your regime choice. Note: salaried individuals without business income make this choice directly in their ITR. High-value transactions. The forms include fields reminding you about reporting certain high-value transactions, even if your income is low. Things like spending over 2 lakh rupees on foreign travel or having an electricity bill over 1 lakh rupees can trigger a filing requirement and need disclosure. Bank details. Make sure your bank account and IFSC details are correct and your account is active for smooth processing of any tax refund. Key takeaways for filing A 2025 to 26. Check your eligibility carefully based on your income type, total income up to 50L, and residency status. If you fit the criteria and your only extra income is exempt LTCG up to 1.25L or small interest, Sahaj or Sugam might work for you now. LTCG above 1.25L or any capital losses mean you still need a different form, like ITR-2. If you have business income and want to switch or stick to the old tax regime, remember to file Form 10 IEA by the deadline if required. Don't forget Form 10BA if claiming 80GG. Be ready to disclose details of high-value transactions. Double-check your bank details for refunds. The general filing deadline for most individuals is 31st July 2025. Filing early is always a good idea. These updates are designed to make tax filing a bit easier for many small taxpayers by letting them use the simpler forms even if they have some small stock market gains. But always read the instructions carefully and consider consulting a tax professional if you're unsure about your specific situation. Happy filing!